Good afternoon, everybody. Thanks very much for joining us. Packed kind of program that we've had here on 3 days. This is the second day. Really interesting that we've had a lot of discussions actually around the living sector more widely, and this one's going to be focused on European residential investment. We'll look at some of those other subsectors of residential as well, but really fascinating discussion. For those who don't know me, my name's Richard Betts. I'm the publisher at Real Asset Media and look after all of the editorial content. We publish Real Asset Insight, which looks at across the sectors and across the geographies, but focused really on, I guess, the research, the analysis, the themes, the insight, the things that are driving the market rather than, so we're very much forward-looking rather than backward-looking. And Real Asset Impact, which focuses around ESG, sustainable investment, and social impact strategies, those kinds of areas. And we're also doing it from a position of not sitting back in a sort of independent journalistic position. We're actually keen to drive this forward. So it's a platform to be able to drive it forward. Really interesting to have a great panel here. Let's start with introductions. I've introduced myself, but let's carry on. Kashee, over to you. Quick introduction.
Hi everyone, my name is Kashee Ramalingum. I work for LifeX. We're a co-living and modern residential operator, as well as we have our own SaaS platform that we make available to our owners as well to ourselves operationally.
Great, Karin.
My name is Karin Koks. I'm head of fund management for Greystar in Europe, which means that I manage with my team the funds for our investors on a day-to-day basis, and that's across the risk-return spectrum.
Great, thanks. Marius.
My name is Marius Schöner. I'm at CBRE Investment Management, heading our German business as country manager, and I'm also responsible for our building our EMEA operations in residential.
Super. And thanks to everybody for joining us. It's deliberately quite small and informal, which means we can also share your views, your questions, and we will try to answer them. Thanks also to everybody who's joining it as an on-demand, as part of our program of live events here at EXPO Real 2023. Let's maybe just let's start, I suppose, on what we're seeing in the market at the moment. Maybe Marius, let's start with you. What are you seeing at the moment in terms of, let's look at the investment market, how we're seeing that?
I think, one word on the occupier markets. Obviously, occupier markets in residential are rock solid across all major metropolitan areas in Europe. On the investment side, we are seeing price corrections, like in the other sectors. I would see the yields are moving not as far out as in the other sectors, but we see significant price corrections.
Okay, good. And Karin, it'd be interesting to get your perspective as well. I guess, do you agree with that? Number one,
yeah.
And also, where do you see us moving forward from here in a way?
Yeah, no, I agree that the fundamentals are rock solid. So our demand side of the equation is really good. Sadly, there is a lot of shortage. But we are solving for that shortage, and on the supply side, because of the last couple of years with COVID, with inflation, with rising construction costs, the supply has been going down. So, that equation is not moving in the right direction for the tenant and the residential space. So when it comes to opportunities, we are definitely we have been seeing for a while pockets of distress where we are taking benefit from, meaning specifically developers running into problems with their financing, and because we have a lot of development expertise in-house, we can easily come alongside, we can take on that and move the project further. So that is a unique skill that we have that is attractive, where we've been able to source deals off market. We're also competing in competitive processes which are especially relevant in the UK student market, which is still one of the more liquid markets, where there are some actual trades going on. I think this is a good time in the market where we can see opportunities for our investors.
And Kashee, obviously you're coming from a slightly different perspective on
Absolutely.
this. So I guess, how do you see where we are at the moment?
Yeah. So I am coming from a very different perspective, and what Marius and Karin have both said is something that we are also experiencing from our end, but in a very solid and positive way. So because the market has taken a bit of a lull at the moment, we are having more investors and owners coming to us, trying to find alternative ways to drive income and alternative ways to actually manage their assets. So what's happening on our end is we're seeing a very stable residential market. There is a shortage of supply, so I also see this on the deals that we're working on the projects. A lot of new buildings are being delayed because the construction market is what it is today. So we have a shortage on supply as well, but what we're seeing on our end is that the demand for residential spaces is still on the very high end. Which means that from our perspective as an operator, we are having more and more deals coming our way, creating a much stronger pipeline at the moment.
Okay, good. And Marius and Karin, just it'd be interesting to get your perspective. I mean, you mentioned, Marius, there that it doesn't seem to be as affected maybe as other asset classes. And do you think it's generally going to be significantly more resilient even over time, given what Karin also mentioned about the lack of supply, for example?
Yeah, I think the long-term or medium-term perspectives are very good for the residential market. I think the big question which we see when we also speak to other players here in the market is it now the right time to invest? Is it already the right time to get back into the market? Yeah, or should we wait? Yeah, and I mean, for me, and I'm very much with Karin, I think if you look at the value which you can get for the price at the moment, it's very attractive. Yeah, so I think you can buy wonderful buildings for a fair price. Yeah, what many investors are trying to achieve is to say, well, I mean, maybe the pricing are moving even further down, yeah, and I like to get a little bit of an extra return there. Yeah, so what they want to do is to get a wonderful price for a wonderful building. Yeah, but I think the risk is that ultimately you get this wonderful prices at one point in time, but for fair buildings. Yeah, and I rather think it's a good opportunity to buy now into a wonderful building for a fair price. So I think it's a good time to get back into the market, even so prices might adjust a little bit further. Yeah.
And we pick that up. I was also going to ask just around, because the next session is going to be on global capital markets and capital flows. It'd be interesting to get your insights as well on, I guess, investor intentions, how they're viewing the sort of sector at the moment, really.
Yeah. But first putting some numbers to what Marius said. So we, with our in-house research capabilities, we see that the exit cap rates have moved out for residential in Europe 110 basis points. That is obviously a lot less than in commercial real estate, but it's quite substantial. So why has that not hurt us in our current investments? Because our rental growth is so strong that on our operations side, we've been able to offset that cap rate movement. And I think that is in a nutshell, the reason why people should not be waiting on the sidelines. This is absolutely the right moment to build up your residential exposure. And coming back to what you said about global investor sentiment, I think this is the most attractive asset class for investors because of inflation hedging, because of this fundamentals, because of the increase in rentership, which is also a trend, urban living. So there are so many trends ongoing, and they will continue, maybe exponentially. So, yeah, I would say, of course I would say, but we are very much in the thick of it. There's no reason to wait.
Yeah.
I'd be interested to pick up, and I'll pick up with you on demand as well, but in terms of demand, I guess, what are you seeing, Kashee? And also, we know that supply at the moment isn't meeting demand, but what about the types of asset, for example, and what people are actually looking for and whether or not that's there in the market?
Yeah, so what we are seeing more and more is that living as a product is evolving. There is innovation that's coming behind this product, and a lot of our members, a lot of our tenants, they want to have living with services. And this is what is driving this momentum. It's not just in Germany, we're seeing it across all our regions where we operate, where there is a higher demand for flexible living. There is a higher demand for the subscription way of life. That means that if I'm moving to a country for 6 months or 1 year, that I have the possibility to actually find a place, find a home to stay, which is fully furnished, that has services, that makes my life easier, and then I can move around with work, because career and flexible working is also coming more and more integrated into everyday lives. And this is something that we're seeing. The residential market itself is a traditional market, right? It has existed for years and years. But what we're seeing is this drive to actually add on value-add products into residential, creating this service living which we're now seeing more and more coming up on the markets.
Okay, good. And does that also reflect your kind of sense of where we are as well in terms of that demand cycle? And
Oh yes, definitely. No, the product that we are offering is product that really doesn't exist. So it's very similar, amenities, co-working space in your building, gym in your building, fully furnished, a community. We create a community which we feel that young professionals and students are really valuing. And that's for us is inherited in our business model, which is a vertically integrated business model. So for people who don't realize what that is, that means we have people on site 24/7. We have security, we have people that organize events. So we have typically 5 people in every asset that is their location for their job. And they're also budget responsible, so they do also the financing. So it's really like a small business almost.
And it would be interesting, Marius and you, Karin, and then I'll come back to you, Kashee, but on the lack of activity in the market, but obviously there are deals that are happening, so there are opportunities appearing. What are you seeing, I guess, who are the buyers apart from yourselves? What's the makeup of the buyers? Who's selling? And are there any examples of deals that you can share or things that you've done that, by all means, if you can't talk about a specific deal, don't, but just generally how you're seeing that in terms of the opportunities that you are seeing in the market?
Yeah, I mean, we have been active this year, so we have acquired around 900 million of assets across Europe in residential. One of the largest deals we have done was a portfolio which we bought from Vonovia, and this is also public knowledge, so I can share it. What we see at the moment, who is active, we see often smaller deals being done, to be fair. Often family offices are more active. We see investment volumes per deal have generally gone down because of the lack of availability of financing. When it comes to the larger deals, then we see more international investors coming to the market. And often this is more value add capital. So if you look at value add capital, and a lot of them are looking, but there were also some deals being done. They have higher return requirements. Yeah? So yes, international investors are looking again at Europe, and in the past they couldn't buy because of the pricing. I wouldn't say, because overall the deal volume has gone down significantly, has halved compared to last year. So it's not that they are massively active, but they are there and they are looking. Yeah.
Okay, good.
Yeah.
And I think there was a deal in Paris recently, am I right?
Correct, yes. And that is a good example of a deal that has been around for a while. So as markets correct, sellers need to adjust to that. So they need to adjust their expectations on pricing. And we have a very robust model to underwrite our prospect deals. And then the time came that it's getting close to delivery, and they are faced with the decision, okay, am I going to take this through to the end? Am I going to lease this up? And the answer is typically no, because they don't have the resources to do that, or the knowledge. So that's where we are a perfect partner. We can step in, help with the design. We take on the leasing risk because we have our teams on the ground. For us, that's built into our business model. And it's a beautiful asset. It's on the corner of La Défense. It's a student young professional asset, almost 700 units, lots of amenities. So yeah, I'm very grateful that we were able to secure that deal.
I'm going to drill down a bit into those different subsectors in a minute as well. But Kashee,
I just wanted to add something very quickly to this, because this is something that we're also seeing from our end, a little bit of hesitation between like the sellers and the buyers, and then the right time to actually act and buy. And what we're seeing is that a lot of investors take a bit of a rethink around their assets, and instead of selling it straight away, they try to actually generate a higher level of income on those assets, pushing a little bit down the stage the sales process. On the other hand, which was actually quite a nice strategy that I found from a fund manager, they're looking at portfolios very differently these days. So we all know that some assets are going through not necessarily the pricing that are trying to be achieved on the market. There are a few distressed assets. They're now looking at building their own portfolios. So instead of going out and buying a ready available portfolio, they're actually buying individual distressed assets and building their own portfolios, whereby we then come into play as an operator. And these are the changes that I've seen over the last 6 months, even more coming towards us. Yeah.
Okay, so that's really the kind of very much the value add,
Yeah.
Element of the spectrum there.
Yeah.
I wanted to pick up a little bit in terms of the social side. We've just had a session as well around innovation, technology, how that supports, and we've had sessions as well yesterday around ESG, social value in cities, where there were elements like loneliness, affordable housing, those kinds of things that were key elements of it. So I'd be interested just to see what initiatives you're doing, how important that is in terms of, I suppose, connecting with the residents, number one, but also, adding social value into what you're doing.
Is that for me?
Anybody can start that.
Okay, I'm happy to take the first cut. So yeah, as I already said, we have people on site that are managing the assets. So they interact with the tenants on a day-to-day basis, and they make sure that people feel at home. And we also do regular surveys. So if something is not working appropriately, then we will take action to improve that. So we always try to get to the optimal level for our buildings. So I think that social element is really important because we have a high element of international students. So, going to a different country, building a new network, in our assets we help. We have cinema rooms where people can watch a movie together. We have game rooms, music rooms. So a lot of ways to interact with your fellow tenants in the building. So I think that's quite unique and it's very well valued. So the other social aspect you mentioned is affordability. So for us, affordability is really a key item we look at in our underwriting. When we go to our investment committee, we always have to say, okay, how is this affordable for our target group? So our research team helps us with gathering that data. So because we are long-term investors, we're not there to push out price just because we can. We want that to be affordable and sustainable for a longer time.
Interesting. And does that mean it's easier in a way to work with cities, collaborate with cities? Is that part of the discussion?
Absolutely. And we also often work together with housing associations. So there's a new project, we take on the regulated and free market element, and then the housing association takes on the social housing. But it's, we communicate as a group with the municipality.
And feel free to pick that up, Marius, because I know you've also got affordable housing as part of some of the funds there at CBRE IM.
Yeah, I think that there's not one definition for affordable housing. Yeah, the way we have different affordable housing strategies. The way we define affordability is that the rent shouldn't be higher than 30% of the average household income. Yeah? So it's not about social housing; it's about serving key workers groups, and this is something which we find quite important. Also, the delivery of new homes is something we find very important. And those are strategies which we pursue. I like also the strategies which Karin and Kashee are pursuing. I think these are strategies where you have more services, where you have smaller rooms, but add more amenities and create more of a community space. I think for students and your targets group, this is exactly what is needed. This is exactly what they want. For families, they are looking more for the absolute rental level, and they like to have a little bit more space, and I think their affordable housing strategies are an important addition. Yeah.
Okay, good. Kashee.
Yeah, on our end, on the social aspect, we are a co-living operator, therefore there's a lot of things that we actually do around tenant experience. That's one of our main focuses. It's making sure that our tenant satisfaction is to a very high level. And what we do around this is the building of communities. So we have a tenant app that actually enables our members to communicate with each other, whether it's in their own apartment unit, but also in their locality, but taking it also one step further globally. So if you're sitting in Paris and you'd like to actually chat with another member in LifeX Copenhagen, you can also do that. You can even swap rooms. So we try to create as much of a connection as possible. In addition to this, we set up our homes so that there is also shared spaces that people can come together. One of the things that the pandemic has actually showed us was loneliness. And our apartments, our homes are actually set up so that people can get out of this lonely aspect and can sit down together with their immediate or wider community to actually come together.
And it's quite interesting because that idea, because real estate before was far removed from discussions around loneliness, for example.
Yeah.
But it's just interesting actually to see how that conversation has changed. Actually, slightly ahead of, I'm now beginning to see it certainly in London. There's much more discussion on things like the BBC around loneliness, and in a way we were talking about that 18 months ago in terms of the residential side. So it's very interesting to see that coming through as a much more common thread, I think. And in terms of the sort of different niche sectors, how do you see, for example, let's not move into care homes, but senior living, student housing, co-living, are they all part of the same thing as far as you're concerned? Are they all elements of the same living sector that you would look at?
Well, we execute on best ideas in the whole rental housing spectrum. The only exception on that is in Europe we haven't rolled out the we call it active adult in the US, where we have specific communities for 50 plus tenants. So I think that is something for the future in Europe. It's not there yet. But what we do have is short stay, student housing, young professional, urban living, flexible housing. So really the full spectrum we offer to our tenants across Europe.
And is that fairly, that it suggests, because they're all fairly niche, granular areas where you're serving different and specific people, that actually the asset management side of that must be really important, I would guess from that.
Absolutely. Yeah, now we have experience in all those, if I can call it, subsectors. So for example, in Spain, there's a lot of expertise on short stay because we have flexible housing, big flexible housing projects there that are delivering this year. In UK, we have a massive student portfolio where there's a lot of expertise there. So we can tap into that expertise when we have a new asset, and there's a lot of interconnectivity in our asset management teams to share that knowledge.
Okay, good. And Marius, from your point of view, how do you see the difference between those asset classes? Are there some that you would invest in, some that you wouldn't, some that are a little too niche for you, or?
Yeah. Well, our focus is very much on multifamily build-to-rent business. And this is, if you look at the investment volumes, this is by far also the largest asset class in investments, with the exception of the UK, where you also have an important student housing market of 30%. We are also looking at student housing. We're having student housing in France, for example. But our focus is very much on multifamily. I think the more you get into specialized operator concepts, the less it resembles multifamily. But obviously it is an attractive asset class, and you need the right partner for certain concepts.
Yeah. Okay, good. It'd be interesting to pick up on, you mentioned what you were doing there, and innovation, again, is something we covered in the last session. And it would be interesting just to see how much of a role that is playing, because obviously potentially if you've got apps, that's delivering quite a lot of data.
Yep.
Is everybody happy for that data to be used, I suppose? And also, does that enhance things for them, but also for the operator and the investor?
Absolutely. So within LifeX, what we've noticed over the years is that there was a gap on the market. So being in real estate, we want to do things efficiently, but also quickly. And what we very, very quickly realized is that there was a technology that was missing to be able to enable us to drive our operations efficiently. So what we did over the last 2-3 years is we've built our own operational platform, and it's an end-to-end platform that actually enables us to do everything from tenant management to property management services, as well as having our tenant app that also works on the other interface. And what that enables us to do is, as a company operating in 8 different cities, we are very lean. It means that we don't necessarily need a lot of people on the ground. We can manage everything remotely, and it helps us to actually respond and communicate with our tenants as well as with our owners very quickly. So our owners are able to see the dashboard, see the analytics behind their building. How is the building performing? What's happening to the building? What are the costs? What's the rent level? On the other side, our tenants are able to follow if there's an issue, if there's communication, what is the process, how long is it taking, what's the response time? This is all very much available on our platform. And today we are actually quite successful when it comes to tenant communication, and our reviews are really good, but that's only possible because we've got that technology behind us, and that plays a huge role. Yeah.
And in general, I'm guessing from an investment standpoint, the more data you've got, the more helpful that is in terms of asset management and maintaining that element of community which is necessary.
Oh, definitely. I mean, gathering the data is so important for underwriting our next deal. It's important for improving the asset to the extent that we can. And talking about innovation, we have our own branding. So, for example, our student assets in the whole of Europe are Canvas brand. And there is a specific Canvas website. People can lease online. There are tours you can take online. So you don't have to come to the asset necessarily. So we give people the option. So technology is also very important for us, where we're taking ourselves to the next level. And that also extends to the whole operating element. So, building management system, energy consumption, that's all in the game. Yeah.
And energy consumption is a very interesting one, because obviously ESG playing an increasing role across all of the sectors. And residential, no different, I guess, to any of the others, which you've got a lot of standing assets. And how do you manage that? So I guess, how far are we down the route with that, and what are some of the challenges? Maybe Marius, for you.
I think, obviously when we acquire new buildings, ESG is very much a must-have. For the older stock, the important thing is, first of all, to gather the data. To know where you stand on the decarbonization path. We as CBRE Investment Management have the goal to become carbon neutral in operations by 2040. The way to do so is obviously exchanging gas boilers, so putting in heat pumps, changing the energy supplier, which is an easy way to do it, to switch to green energy. On-site solar panels is a little bit more challenging, because it has quite specific, in each country you have different rules and regulations which you have to follow. This is not as straightforward as someone would think. Finally, insulation to reduce energy consumption. These are the four main areas how we can improve our buildings. And we have asset management plans in executing it step by step.
And I'm guessing from the demand side as well, are we seeing more residents actually, wanting it to be environmentally friendly, but also presumably that lowers their bills to a certain extent?
So we've actually done a little exercise at the beginning of this year, where we tried to incentivize all our members to actually identify a little bit how each house is currently using electricity and how are the utilities going. And everyone, it was 100% adoption, everyone participated, and it ran over 3 months, I think. And we collected the data afterwards to actually see how much saving could be done. And that data was actually shared with all our tenants. And it's one of those ways that we try to bring them together. And as well, we have members reaching out to us, asking us if we can do this a little bit differently, just because they're picking up on more sustainable things that they could do in their homes that we don't necessarily see straight away. And it's very much a two-way stream that we try as much as possible to also incentivize our owners who work with us, what they can invest in. And then on the other hand, we also have our tenants working with us very closely on that end.
I just wanted to pick up on geographies, because obviously there's opportunities across Europe, if you like, but it would be interesting just to get to see where you think there are opportunities at the moment, where, what is it that's driving your acquisitions? What are you looking for? Are some countries in, some countries out? What's the situation?
Okay, so we are a vertically integrated business, so the whole operation starts with our people on the ground. So we do business in all the 6 countries where we have our teams. So in total there are 740 people in Europe working day to day on all our assets. And how we are looking at the geographic investment space is that we have a very solid investment framework supported by our research data. So we come up internally with what should the spot yield be, what should the exit cap rate be, what is our expectation on rental growth. That's all our in-house expectation. So that is a given. And then we have the local teams. They come to us with opportunities They underwrite it based on those macro elements. And then we have, from the fund side, we have the target returns. So that all blends together. Then the deal gets presented in a forum on a weekly basis, and then we discuss them through. And then, if it makes sense, and if it's supported by the local data, then, we will pursue with it. That is how we are value investors. We're not saying, we need to have a deal in Ireland. No, we want to have a deal that works. And that's how we look at it.
Okay, good.
Yeah, I mean, we are investing in residential in 7 regions. It's the largest countries: UK, France, Germany, Spain, Italy, Netherlands, and in the Nordics, Sweden and Denmark. These are also the markets which we cover with teams on the ground. The market hasn't corrected uniformly in the same way. So we find that, for instance, corrections have gone quicker in Sweden, for instance, also in Germany. And more recently, we also saw market corrections in Denmark. One of the reasons being, especially in Germany and Sweden, that we see an element of distress because developers used to buy land banks. They financed the land banks at short term, and now they are in a struggle to, either have to refinance or sell. Sales prices are not there where they want them to be. So this is why we see more distress in those countries. Yeah? In other countries, like in Southern Europe, typically developers are taking more option agreements on the land, so they don't have as much capital exposure. In the UK, a lot of the developers hold the land bank full equity. This is why we saw less price corrections in Southern Europe and the UK. I think the market that has corrected least is France. Yeah. So yes, we expect to see opportunities in all markets, but there's some markets who are ahead of the others.
Okay, good. And just almost finally for me, I wanted to pick up a little bit more on the cities collaboration, which is how important is that for you as an investor to be talking to the cities and also having, I suppose, a long-term commitment to those cities or a long-term strategy within them. And I also mention that because Adrienne from the City of London is there, so you can't say anything terrible about London, that's for certain. But it'd be interesting just to get your perspectives on that.
Shall I kick off?
Yeah, no, it's incredibly important because obviously development is a large part of our asset execution. For development, you need a lot of parties, and one of the most important ones is the municipality, so that there is a good understanding of what is that we have to offer. And we have to offer a lot, I think, because we have expertise, we have discretionary capital, so I think we can be a good business partner, and especially, in all our countries where we are present, Germany, Netherlands, France, UK, Ireland, Spain, that is where we have made those relationships work. And again, because we have very senior people on the ground with very strong networks. But that is really, really key for the senior people in our team.
Okay, good. Any view from you, Marius?
Yeah, I agree with Karin. I think especially in the development phase, the close liaison with the cities is very important. Yeah.
Okay, good.
Even, sorry, if I
go ahead. Yeah.
Even from our perspective, even though we're not actually applying for the permits and going for the construction, as an operator having service living, which is a bit more of the newer asset class on the market as well, it is crucial, what we've seen, to have a good partnership with the city. We have it in most of our cities where we actually communicate very closely so that the council is aware what we are actually doing as a residential living. And the latest example is in Paris. Before we even signed our deal, our proposal was put forward to the mayor so that the mayor is actually on board and understands what will be happening as a development in the area in question. And the mayor is up for it, and that's where they also approve, so that it also avoids challenges after the construction has already kicked off, and then the mayor finding out, actually I didn't want that type of living here in the area. And that does resolve and makes things much easier. Yeah.
And of course, I guess as well, from your point of view, as investors and Marius, it matters where the residential is, what the area is, and you want the city to be supportive. Because one of the interesting things that came through in the discussion we had yesterday around social value and cities was how transformational real estate investment could be, working with the cities to regenerate areas, create different areas, really.
Yeah, I mean, typically, if you look at the larger residential investments or the areas which are going to be developed into residential, you look at areas which used to be either industrial land, often, or even harbor areas. Yeah. So the investment into a residential project is really a transformation of the whole area, and this is what it makes so important. Yeah.
Great. We are up against our time, but does anybody have a question that they would like to ask? And if so, I'm going to scan the room just for about 30 seconds here, or maybe even less, maybe 10, depending on how long it goes. And I think we've probably reached the end of that 10 seconds. So final question to everybody, which is, if we're back here again in a year's time talking about residential, what will have changed? Where do you think it will be? Where do you expect it to be? And I suppose also in your businesses, where do you expect to be? What changes do you think you'll see? I'm looking for something aspirational.
I'll kick off with something a little bit maybe controversial.
Okay.
I think one of the things with residential asset class is that regulations are very old. They've been set up and they've been designed ages ago. And one of the things that is innovating and evolving is still a little bit sometimes in a clash process with regulations. And these things don't change quickly, but maybe there might be some movement forward for next year in that regards.
Okay, so regulatory change is what you will be hoping for. That'll be your wish. Okay, Karin.
Well, what I think will happen and what I'm hoping it will happen is some stabilization of valuation so that people are starting to transact again. This illiquidity is there for a reason, but for the market as a whole, it's so much better if people can start doing deals again because they see that there is a level playing field. And I also agree that with this whole new residential asset class, all the subsectors, all the new products basically. There's a bit of a mismatch between the offer, what people want, and the established regulatory environment. So I totally agree with Kashee there. Yeah.
Okay, good. Marius.
Yeah, I think at the moment what we still see, and we haven't really spoken in detail about it, is that we have very particular country specific regulations, but also each country market functions differently. Yeah? There are hardly any service providers who are good across all countries, hardly any technical platform which is used across the industry. Yeah? So I think in 8 years from now we will, and the reason being is that residential in many countries is still an evolving asset class or an emerging asset class. Yeah? So insofar I think in 8 years from now we will have, this is also the hope, but also my belief, a much more pan-European asset class with pan-European solutions. Yeah.
Great, and very interesting because that also mirrors a number of the things that have come up, both in terms of senior living, but co-living and those kinds of things in discussions we've already had. We have finished exactly on time, which is a blessing for you, which means that you can make your next meetings. Thanks very much for joining us. Thank you to everybody who's been watching this on demand as part of our program of live events from EXPO Real 2023. And because we are all here in person, we can give ourselves a round of applause for being here. Thanks very much, everybody.